Parliament yesterday voted to delay the sale of Tullow oil stake in East Ugandan assets to a Chinese company, Cnooc, and a French oil company, Total, at a cost of $2.9 billion US. The argument was that this can only be done after all relevant laws to manage and regulate the oil sector in Uganda are passed.
We have put a moratorium on the executive arm of government to make sure that it does not enter into any further transactions in the oil sector.
Tullow Oil has been awaiting for a final government approval on the 15th this month, which is expected to unlock a $10 billion US investment to kickstart the production of oil sector in Uganda by Cnooc and Total. Efforts by Energy Minister Irene Mulroney and Prime Minister Amama Mbabazi to prevail over MPs known to support the resolution fell on deaf ears last night. The sale of Tullow oil interest to the two companies is expected to fetch $909 million US, which is about 2.6 trillion Uganda shillings in capital gains tax. Government says the parliamentary decision taken last night could have serious ramifications.
If we halt the process, even the capital gains tax we are talking about, we shall not receive it. Even that which we have received, we shall have to pay back. Madam Speaker, that is the truth.
But the lawmakers argue that what Tullow Oil plans to sell had reverted to government, since licenses to operate two of its oil fields, Block 3, one being Kingfisher, expired and has never been renewed.
What are you going to renew? There was nothing to renew, Right Honourable Speaker. The period had expired.
And government suspended licensing pending enactment of the new laws that will provide for licensing through competitive bidding. However, we have transactions which are going on.
You start with 4 years, you do work. After 4 years, one may apply for an additional 2 years.
This in turn means that the delay to pass relevant laws will automatically cause a delay in oil production, which was expected to start next year. In response to last night's resolution by Parliament, Tullow Oil says they are dismayed by the bribery allegations, but welcome any opportunity to appear before any inquiry set up so that they can clear their name. Tullow Oil's Chief Executive Officer Aidan Heavy yesterday wrote the Speaker of Parliament warning that they are considering a possible legal action to protect the reputation of the company if the same allegations are repeated outside Parliament. A statement issued by Jimmy Kiberu, the corporate affairs manager of Tullow Oil, this afternoon, says the company and its partners are consulting the government of Uganda about the likely effects on the company's work in Uganda and on the farm-down effects on the potential investors Cnooc and Total. Tullow Oil also hired rigs from Swiss and Polish companies at about 500 million shillings per day, but these rigs have since remained idle for about 10 months, and yet Uganda will have to pay back the money when commercial oil production starts.
If the oil companies don't hire the rig to sink a well, it will not be paid.
Government seems to indicate there could be a loss of $900 million in a deal between Tullow Oil, Cnooc and Total if there is a delay in the transfer of shares. But this raises a question: what is Tullow selling if part of its oil wells reverted to government? Jingo Francis, NTV Tonight.